There are plenty of ways of trading the markets, but essential for every market is to know to which direction the market is rising or decreasing. With other words, we need to identify the trend. In this video, I'm going now to show you some very simple classic methods how you very easily can detect the direction of the market. The first one is the trend lines. So we begin first in any kind of chart, might it be a low time frame or higher time frame. Before doing that, we need first to determine our goal. Are we day trading or are we trend trading, but in connection to higher time frame? And if yes, which higher time frames is relevant for us? In this chart, you see the NASDAQ price development in 30-second chart. So we can, for example, now detect the major trend on a higher time frame. It can be 5 minutes, 10 minutes, 15 minutes, hourly time frames, or daily, or even weekly. It depends on our personality as trader and our risk tolerance. If we are using the higher time frames, our profit potential is huge, but on the same time, we need to accept a kind of drawdown. There are times in the market when we enter the market does not run immediately in our favor. So, in case the market is running against us, we need first to limit our risk, but we need to accept that period of time the market is behind us or against us. But at the end, we will close the account or the trade if the goals of our trends has been reached. So here we use now a higher time frame. We go on 15-minute chart, and we see the latest move of NASDAQ during the last days. But if we look more closely, we see that on 15-minute charts, the highs are decreasing. The determination of trend is if the trend is making higher highs and higher lows. We call this then an uptrend. And if the market is making low highs and low lows, we are in a downtrend. We see here, for example, a bunch of uptrend, but in a minor trend. But if we look closely, we see that the market has already made low lows and lower highs in general. So, in this kind, if we, for example, go short in this period, we have to accept this drawdown as the market is running against us. But our target is that we trade only in direction of the trend, in this case, short time frames. The second question is how our risk strategy is, as it is the most important part of every trading system, the money management. Now, in case we can start to sell the market at this point, we have two or more different strategies. The first is we can place our stop here, the second one here, the third here, and so on. The next step of strategy of trailing the stop losses is that we use the trend line itself as trailing of our stop. That means we move our stop in direction of the trend line. As soon as the market has reached the top, we execute the trade immediately, because the possibility or the probability that the market makes now a higher high and low trend on higher time frame and also a trend change occurs here. So our first duty as responsible trader is to manage the risk. Of course, there is no trading system that is producing 100% of profits, because we always have drawdown, and drawdowns are caused by volatility. Volatility is very important to move every trend. Otherwise, the price will never move, and as trader, we never will have any chance to make profits and grow our account. On 30-minute chart of NASDAQ, we see that there are several markets that are trending very well, to which NASDAQ and in general stock markets belong. So why not to start to become a trend trader, as staying in a market and using the probability of making profits in a trend is essential for every account to grow up, and with a little bit patience we will be able to grow also our account. If we now connect some points, we take the lowest low and we determine this trend line as a major trend trigger, and we use several others. Especially here we see the move of NASDAQ, and this is the first warning. Also, after that period, NASDAQ has been risen further for several weeks, but at this point we see that the momentum is still down while the NASDAQ is rising, and finally started here to build a double top. So after some period of time, NASDAQ broke the second trend line on major time frame, and then the third one. So trend lines used correctly can warn us and be good helpers to warn that maybe a trend is going to an end. And if we look further, we see that after this period of time, NASDAQ started to make low lows and also low highs. Of course, there are many factors that are causing the moves, and there are different kinds of strategies, different kinds of opinions and trading styles. But the main question we need to ask ourselves is, what is the real reason that this powerful market and liquid market like NASDAQ is not able to make any higher highs and has a lot of difficulties at these levels? What is causing that at these special levels the market is going down after a period of time coming up, but along this trend line the market is going down again? To understand this, we need also maybe the knowledge of support and resistances. In any kind of market, it doesn't matter, we see special key levels where the market is meeting a very powerful counterattack. or counter defense. In terminology, some say this supply demand, support, resistance, whatever. Some understand that resistance is the higher possible defensive line where the counter force in the market is attacking the bulls. And the bulls are people who are buying a stock and driving the market higher. It doesn't matter. We can also call this one supply or also support. Why? Because here we can call this resistance bearish support, and the support we can call also bullish resistance. It doesn't matter what kind of terminology you use unless you have understood the principle in behind of that. Based on trendline strategy, a strategy can, for example, be unless the market has already broken down or crossed a trend line, we sell the market. And before doing that, we need to understand where is our exit, and we have to define that. Therefore, we have two different kinds of exits. The first one is offensive exit or taking profit. Some are using this, for example, if we start to sell the market here, we can say that at the high of the last swing point, we place our stop, while here is our entry price. Some are limiting their profit because they are afraid to lose the money. Maybe they have weakened nervous system. Some are talking you cannot trade the market like 20 years or 10 years before. And all these are not true. If we look back, we see the mechanisms how people traded the market 30 years or 40 or 50 years ago is exactly the same. Why? Because there are two very powerful motives that are driving the markets. The first one is fear. The second one is greed. And both are very powerful emotions that are driving the market logically or irrationally. In this case, we have taken our trade and we put our taking profit at 122, meaning if the market is hitting us, we are risking maybe 1%, and if the market is in our favor and reaches our profit target, it will mean that we made 2% or our profits are 2 times bigger than our 1. It depends on your position size. On bigger the time frames, the more responsible we should trade, because the volatility of the markets who are traded on bigger time frames are much more bigger than on lower time frame. Therefore, before entering any market, we need to adjust our stop loss and exit strategy. This is our rule number 1, always. A good rule is that we can, for example, limit with every taken trade our risk management to maximum 1% of our account. Let's say we have an account of $10,000 and our maximum loss for every trade should be 1%. In this kind, our maximum risk for a $10,000 account is limited to $100. How can we calculate it? Well, you can look at your account balance. How can be calculated on the market? Well, you can see the number on the right scale, at which price the market is trading currently. And on your broker account, you have the possibility also to size your account and to put the number 100 if you are trading with $10,000 account, for example. And it will show you immediately the stop level that you can place. I usually do that if I will lose, follow this rule, 100 plus 10 pips, because sometimes we can see here on the spread level, currently the spread is 1.8. So we are taking 110 US dollar because sometimes the market volatility is so high that it reaches our stop level, but the market immediately turns back to our favorite direction, and that way we will not be able to take that profitable trade. With other words, the market has thrown us out of the market very fast. Doing so, we take the decision that we decide when to leave the market or where the market tells us it's not a good time to make profits, take your losses and go away. There is a second way. Now we use another indicator, is called EMA, meaning as not every trading system is really giving an accurate signal, we add a second indicator to confirm if we are on the right side of the market. Back again to our entry. In this case, I would take this trade because the market has broken already our trend line and the market is below our moving average. So the moving average is the average price that is triggered to the close price or entry price, it depends how you define that, of the X period. In this kind, we have the EMA 200 of 2 hourly chart. This chart is 30-minute chart. This EMA is 200 period of 2 hourly chart. Now, we can say each time the price is rising above this EMA, we buy the market. And we can, for example, place our stop loss along the moving average. But we see from here to this period, the market fell back, our profit potential is less. Another possibility to trade that section is that we enter the market, we say our profit, and now we have again manually adjust our stop loss to say that we will have 1.5% or our reward should be 1.5 times bigger than our losses. In this case, I will place my stop below the entry bar, and as soon as the market has reached our profit potential, we liquidate the market. Of course, in this case, we are working again with odds, meaning sometimes our profit target will not be hit and the market drives back and hits us and we lose and we exit the market with losses. We see here again, we do the same, we go into the market. In this case, we have 1.4 meaning our profit potential is 4 times bigger. And we want to repeat it again, this time $1.5. But we see here the second time the market field first of all runs in our favor, but hits back immediately, goes again, but does not reach our profit target, and instead will leave the market with losses. So this one is also very questionable, but it is up to you how you will trade that. The profitability of this trading system is around 52%, meaning 52% of time we are making profit, and if we are making good money management, so this is a good return year of between 10 to 15% per year. Account growth is connected to that. The third method is to use the so-called Donchian channels or turtle trading. Donchian channels are traditionally a breakout trading system, but with very high profitability, but also very high losing ratio. Only 1/3 of all the trades are profitable, but the revenue of account development per year is between 15, 20, and sometimes more. The average is between 15 to 18% of year. The legendary traders like Richard Dennis and the Turtles practiced it for many years. We can see now here in this period again, we have here a trend break. This is our first signal. Also the EMA broke, but we see here that we still are in an uptrend based on Donchian channel. The highs have still not broken. Especially at this point, the market breaks for the first time the lows, as the market is still below this trend line and this trend line, and also this EMA. We can suggest that the market will go deeper. Possibility number one is that we take a short trade here. Possibility number two is we wait until the market rises up to the EMA that is working now at a support or resistance, bearish resistance, and then we place our sell and we let the market go. As the market diverges back, we have the possibility to liquidate the trade, or we still stay so long in the market as the market again breaks that upper level. In this case, the short period will be over, and from here we take only long trades. But unless the market is moving in this period, we stay bearish. Again, we can trade as a trend trader, meaning we sell here and we let the market move. There are possibilities that the market, for example, moves higher, breaking that channel, and immediately falls back, and do the same, breaking this channel and moves back. So we will stay in a very big drawdown, but after some time we can realize that the market will go deeper. Of course, the other possibility is true. The market is running higher, falls back in the channel, making very big drawdowns, and finally the market goes higher. But that all belongs to trading. So before taking every trade, we need to define our goal Do we want to trade the market as a trend trader? If yes, we have to accept the drawdowns. If no, we should develop another strategy. To demonstrate this, we need now a backtest strategy. Let's say we take only this move. We see here in NASDAQ, for example, the market in general is making higher highs and higher lows. Wrongly, many traders interpret these phases of the market as a trend down, what is absolutely wrong, and it will cost them a lot of money. So try to understand the concept of higher highs and higher lows, and also the minor trade. We go back now to a lower time frame. We see here that the market is above 202-hour EMA, and we want to time where we can enter the market. The possibility one is here, that we can take the trade, or the possibility number two is that we only take trades which are bullish because the price is above the moving average, and the moving average, unless it is not touched, is moving higher. So this is a good signal for us to take a long trade. Therefore, we are using now our trend line. And we let it run. Before doing that, now we can say if the market is breaking this level, we will enter a long position. But the most important question is, where do we put our stop loss? Do we want to have very tight stop? So we can use, for example, these levels of our stop loss. It depends to our personality as trader. We can also place our stop loss here or a little bit below the moving average, as we know that the moving average will act as a kind of support. In this kind, I am putting my stop and trailing that with the moving average. So we see that the market is structuring. And also is coming behind us, but we close the trade only if the market is below the EMA or our stop loss is hit. And of course, the drawdowns, negative and positive drawdowns, are part of this business. You see again, currently we are with $60 in minus. Some people are making the mistake as they see that the market is running against them, they move suddenly their stop loss. Never do that, because we never know if the market will drop much more deeper, and that will cause a very big loss. If we are losing 10% of the account, we need 25 positive trades in a row to equalize the prior balance. If the market is running against us and we have 50% lost of our account, then and at this part we liquidate the account. We see here now we have $244. If we have a $10,000 account and our mental stop is at 100, it means that we have been trading as an undisciplined and bad trader, because our stop was 100, but we let the market take us additional $144 more. So it depends on you as trader. If you are using $100 loss, then it must be compatible to your position of your stop losses also on your EMA. If it is not true, then we need to decide, do we want to increase our risk, for example $300? In this case we did everything right, even if the market hit us and we have made losses. So we did everything right. We have been waiting, we have been taking the buy signal, we have put, and this is much important, our stop loss, but the market is telling us go away, take these losses and stay away until you have another possibility. Now we trade with the second strategy. The price must be below the EMA and below the trend line. We can take a trade. Now we can do it much more smarter. If the market breaks below the trend line and below the EMA, we do nothing. We wait until the market comes back to the EMA or trend line and cannot break it higher, and instead it starts to turn back, and then here we can place our sell order. If we go immediately, we take every trade immediately, then we are called aggressive trader, and if we are doing that way, we are a conservative trader. So the difference is that the conservative trader needs much more patience, while the aggressive trader is or has less amount of emotional patience. So now we want to see, unless the market is in between of this range, we interpret this as a diversive or sideways move, meaning that the bulls and the bears are fighting very hard against each other. Typically in this period of the market, the number of losses and account ruins are very high, extremely high. And we can see the market is making very volatile spikes up and down. And now we want to act as an aggressive trader, meaning with the first breakout we buy the market upside, and if the market breaks down we sell immediately. You can do it as a conservative trader. Here the market is running higher, we buy. Where is our stop? Our stop is again on our moving average, we trail. The potential of this kind of trading system is that we have a lot of pattern traders, so that's giving us an additional edge. Now, for example, we decide to recover the prior loss we made, this one, and we say, okay, First of all, we trail our stop here. Our account has now increased to $900, and we want to add a second position. How can we do that? The possibility is we, for example, use the trend line that's like this, or it means the price has to be higher than this period, breaking this trend line and also this trend line. We can place the next buy order. The second possibility is we let the market go higher, coming back, and then we buy here. If the market is breaking below, we don't do anything. Instead, we let the market come down, because it can be possible that the market will go deeper. This next possibility will be that the market will start to resignate here, so we'll have a bunch of consolidation before breaking higher or breaking down. And the third possibility is the market will stay at this zone and starts to get higher. If these patterns happen, then we can again use another trend line, and this will be our entry. Let's check this out. For the second position, I will now act like a conservative trader. We see here the market is moving higher. We didn't take the trade. It came back, but it broke and now is breaking down. At the same time, we trail our stop to the moving average. Now it can happen that the market even comes below our price, near of our stop, before going up, and we stay in that trade. We see the market is turning back. And now going higher, but is coming back, is not able, and so we use another trend line. Now, what do you think? Where is our next bullish entry? Guess it is here, but we wait for a pullback. We don't do anything. The market is coming back. The moves are slower. We wait now if the market will touch the trend line. This one. It touched, going down, coming above, but coming back again in the channel, as you can see. So it was a good decision not to take that next bullish trade, because maybe the second trade will be caused in a loss, and that will minimize our profit chances. And we see some moments later, the market is coming back again towards aggressively again our entry price. And what we need to consider is good trading is about good timing. Now our stop loss is our taking profit. We put it immediately If the market is hitting us, of course, in this case, we are taking less profit, and some say, yes, but you had the possibility to take that profit. It is not true, because we are trading the trend, but we expect that the trend rises much more higher. In this kind of good trading and disciplined trading, we just limit our losses. We cut our losses immediately. We take the losses if they are there immediately. We keep the problem very small, and we let the market give us the rest, and the rest will be the profit. You see, after sometimes the market is now rising higher, we can trail our stops also higher, but we stay alert. As soon as our stop is reaching, we immediately get out of the market, because the sentiment of the market can turn. We see now the market tries to reach our stop, is going higher again. It's not getting that. And this kind of trading, simple trading, is practiced since decades, for many decades, and it is a good possibility not to take every trade. We just take very high qualitative trades that are giving us very good odds. We see now the market is running against in our favorite direction. So now we can, for example, hide this trade line, and instead we can place this trade line. As soon as the market is outside this area or above the trend line, we have again the same criteria. The market is above the EMA, and the market will be above or crossed over the trend line. Finally, the market tries to break out. Whatever happens in this kind, we will be in profit, and we place here our second buy. So I will stop now the back test here. This is our second buy. This is our first buy. Instead of going here or here or here in the market, we have been waiting for market to go down, but systematically. And finally here at this price, it was the optimal price. What we do now is we trail again our stop. And again, we are on 5-minute chart. We are trading in direction of 200 moving average 2-hourly period. We are taking only bullish trades instead of selling and buying and causing a lot of troubles in our account. Now we trade very smart. Now we can do this countless again. We can, for example, at this part, we can, because two positions are in profit, we can now take out one, and we have covered our losses, as you can see here. And now our account is with $45 in plus instead of minus $244. We still have again only one position in the market, but this position is in profit. We need to keep eye on our stop and to monitor that first. We can put now another rule for our trading strategy to say we only add the next position if our stop loss has been a taking profit, meaning that our stop loss, for example, is placed somewhere here, right? Because the difference from the stop, if it's hit, and our price will be positive. Only then I will, for example, add the next position. And so long we do nothing else, and we can see here the market is in consolidation phase again, because the price is between this area and at the same time our moving average reaches above our price. This is our first priority, to keep safe our account of losses and if possible to save some kinds of profits. Again, this chart is 5-minute chart. The EMA is 2 hourly, 200 periods. Now, for example, we could say we make ready to get the next trade, or we got hit here. Now we have made $104 and we wait for the next possibility. Now the next possibility is that the market needs to go down below this trend line and above this trend line. Unless the market is moving here in 5-minute chart, we do nothing. We can also make that move. We do nothing here because we want to take only high quality and high profit potential trades only and only. It doesn't matter what other people are writing in the chats. It never matters. The only thing that matters is we focus on our trading system. Now, knowing this in behind of our head, we can add the next indicator, Donchian trading strategy. Can you remember it? It was the daily 20 moving period of the Donchian channel, meaning if the price is rising above this line or the upper side of the channel, the market has the potential to go higher. And if the market is down, the market has the potential to go deeper. So what can we do now here? First of all, we hide away the trend line. We can use now trend lines, or we can say if the market is running higher, we buy immediately. The problem is that over 85% of all breakouts, upsides or downside, will be fake and they are caused in losses. What's better? So we can say in a bullish trend, and how can we define that? We see here, for example, that the line or the upper class line is increasing. And on the same time, we see that the average lows are on the same time increasing too, right? So now we can say, also we can see that the market at some levels turns back, and in some levels the market is going down, for example here. But something happened here that the market is going up again. All right. Based on this, we can now use trend lines first, and we can mark our own levels. Can do it like I do. We can go also a little bit backward. All right. Now we can say, for example, if the market is down, we wait, we do nothing until it's breaking a level, and after the market is breaking up this level, this line, we place a buy order and our stop loss will be here. Then the market is reaching a little bit of our stop loss, possibly not hit, and going higher. In this case, we can also make a cover buy, making a next trade here and put all stop losses here. The risk is that from here to here, the market will have caused a big loss, from here to here less, but we use the power of probability. The AMI is now down, but the upper channel is up. How to trade this better? Well, we can use our last rules using trend lines. If the market is higher than trend line and the moving average, then we place immediately our stop, but instead of moving average, we use one of these levels at stop levels. We can also say, if the market is above the moving average and trend line, and the market falls back, and after the market is above this local support or resistance, whatever, we go into the market, we buy, we place our stop here, or we place our stop here, or here, or here. Why? Because these are the current key levels of the market. So let's do it now with the price above the EMA, and we just generate buy. Now this is our first buy. I am doing this now without stop loss. Okay, we can say now, yeah, we got stop loss, so I take it out. Then we wait again until the market is above the EMA. And you see it's a fight against time or our emotions to stay patient. And also losses are something typical. Now we can see that the market is nearing the low of the Duncan channel. This is the reason why we take the losses immediately. Because it can happen that the market goes down and then the bias turns to bearish. And now you see the market is down. So I will stop it here. And if we look now on a higher time frame, this is 5, and we're looking again on 40-minute chart. And we see here that on 40-minute chart, the trend is up. But the Duncan channel and EMA are causing fake signals, meaning if we go short here, it will be possible that the market hits us again and turns back again. And that's making a lot of traders very, very angry and also confused. But we will continue with that. Before I'm going to show you a very good trading style. So the price is below EMA, the price shall go below the Duncan channel. It doesn't. We take from here only bearish trend, meaning we wait until the market is going higher and then comes down. It's coming down. We take the trade and we put our stop loss here. The trend bias will be changed until the price is again above this Duncan channel. Now we can, for example, this was the previous stop. We can put on stop here. If the market reaches that point, we immediately get out of the market. And it happened again. So I close it and we wait again. This is the way normally traders are acting, but not the way what I am doing. So we take the next sell. Because I am working with fundamental data, and based on that strategy I mentioned in other videos, but I'm going to mention this again. So until now we had 5 trades, 2 positive and 3 minus trades. Our account is again at minus 135. I'm showing also the losses in my videos, not only the good side. Now the market is going down. And now you see here, this is our position. Our first stop was here, then here. Now we can turn immediately the stop here to this line or to this line. Meaning if the price is coming up here, we immediately get out of the market and take the profit. And we wait for the next level, the line below the price now. And hit. We are out with $92 again in profit account. Okay, we missed this one. We wait until the market coming up and tries to go down. And here is now with key levels we can decide. If we take this trade here, our stop will be here, right? Better will be if the market is coming up here and going down, because then our stop loss will be tighter. So never mind, I will take it. I will make it very hard. So we sell and our stop is the line above. We can take out now the market, or we can let our stops at the previous level and see what will happen. And we got hit again. Now we are again with $109 in minus. The market running up. We don't do, or based on this strategy, we can't do anything. We just need to wait. And I'll let it run a little bit fast. And we see in this stage of the market, the bulls got trapped. Also the bears got trapped, because we are doing trading only based on technical data without considering what is running in behind. And that makes this business very dangerous to lose money. But as we have a strategy, and as long as we stay disciplined, it doesn't matter, even if we have some losses here. And you see I have chosen especially periods that are showing you the dangerous side of the market, not the chocolate side, like many other people are doing, right? Because they are selling just products. But we are trading here to show you what is the real side of the market. Now the buyer is still bearish. Can we sell here? We wait. If the market is coming down, okay, I take this trade because the stop loss is now tighter. We hit and the market comes back again, but going higher again. So we wait a little bit. And now it seems that the market got some news, events, whatever, it driving higher. Like I said, we go above this upper line or upper channel, we go bullish. So the market broke. Wait for confirmation, pullback. So we take the first one. I will put my stop at around EMA. To give a little bit time or breeze for the market to develop. can also use trend lines like at the beginning of the video to have additional confirmation. So I put away the stop loss to just show what will happen. Here is our buy, and the market came down so long. And if you trade with just hope, I hope that the market goes higher, I hope that the markets will go up. Look now, the account is minus 1,400, 14% loss, 17% loss if you are not using any kind of stop loss order. In this case, we know that the market will go higher, and you see at the end we had a win rate of 33% and 691, right? So I did this trend specially for all traders to show you how it will end if you don't use stop loss orders. Instead of taking just $100 or $200, in this case we have lost nearly 50% of the account in just 5 trades. That will happen, right? All right then. So if you're using the Dunkin channel, the best way is what the founders did, that we take any kind of trade, we put our stops only below the lowest part of the channel. You can also use that, right? I'm going now to illustrate it how the Dunkin channel is used correctly, but you need to give a little bit room also to your trades. Then we will have an additional rule now. The next rule will be we take every breakout. All right, I will just show how the breakout trade is traded, also is caused. We will have also a lot of losses here with this kind of trading style. So unless we have no signal, we don't do nothing. At that time, they did not know what other possibilities we will have today to predict the price. So this is the first buy signal, and my stop will be here. The trade is over if our stop has been hit or the trend channel is broken. Some are using only one Dunkin channel, some are operating with 2. And if using this, we can do the same. We can go here, we can type Dunkin. We'll go down a little bit and we click it twice. All right, as you can see, we have now 2 Dunkin channels. The first one is 55 period and 1 day and daily. The second one is 20 period. We enter only if the 55 period is bullish, and we take only the signals of the 20-day period. We can, for example, take the signal if it is breaking the upper channel or also the middle line, and the stop is always along the 55 Donchian channel. So let's do this. Here we will have a big drawdown. But we are trading the trend here on 1 hourly chart. Okay, the market is again above the midline. We take the next one. The stop is the same for all positions here. Here's the stop, and you see the market is running above the midline. We can take this and we can add. Now we can trail our stop. The market broken higher, we can buy the high and we trail our stop. So we have now a real edge here because the Duncan channels are based on higher time frames where the big players are playing, meaning we follow their move. And we see now the drawdowns of the account is constant, is not too big, it's not too small. We can add the next one, and that way we can increase our positions. The stop is all the time here. We have an entry, we have an exit, and we go with momentum. So very simple trading system. And you see during the last 3-4 years in NASDAQ this strategy worked very well, using by very successful traders on Wall Street and hedge funds. So we don't need too much voodoo. Now if the market breaks higher, we go again. Now we have 7 positions. Our stop is coming slowly above our position. So the market breaking here, we go. You see, currently we don't do nothing. Here's our stop. Therefore, always trade with the trend and never against that. Also, if you see sometimes the market is making 500 or 600 points and you can think, oh, I could make good money. Maybe today you can get more good money, but tomorrow you will lose it all if you are trading against the trend. This is the power of trend. As you can see, and if you remember, we had something around 1,500 losses in the previous test. So I will take out, and you see here the amount is 2011 2011, we take out another one and another one. Now we have 5 contracts, we have sold 3. Our account has been risen to 6,399. But we needed to be very patient and to stick to the strategy all the time. So the market is running against us, but we are now in profit, and most importantly, our stop loss is above our price. So whatever happens, we come out as winners. It doesn't matter what happened. We can stay now calm and cool. So still now the market bias is bullish based on our settings. And we liquidate immediately all the positions. We take the first short, above midline. If it's going back, I take the next sell because the bias is now bearish. Going up again. So I average the sells and again the sell. It is the current time of now, right? This period. Where is our stop? Our stop is here at 15,626. So the next sell is if the market is running here higher and coming below, then we sell again. And we see now our account has been risen from $10,000 at the beginning to 11,910 profits, meaning we have doubled our account since the February of this year. We have 80% profit rate because we have changed the rules. So this is the current state of the market. We have sold here, we have sold here, and we have sold here. The next sell will be if the market is coming down below this average line, and then we sell here again, and that way we cover this beginning one. We could also, for example, say we wait until the market is going up and then coming down. We can do the same, no matter. So our stop is here currently at the 55-day channel, and at the beginning then this was this hot period where we have changed the strategy, and then here we covered, we bought, buy, and our stop was moving that way. But only we have calculated that the sum of all our positions should not be bigger than 1%, meaning if the stop hit, our maximum loss is $100 or our maximum risk is 1% of the account. We liquidate immediately all the trades. All right, so once doing this, now finally, this is one of the indicators, trend indicators I have developed. This is the name of the indicator. So the DaveBrascoFX higher time frame, low time frame, and this is the 3 hours. But you can, for example, set this and you can trade it on daily chart. It doesn't matter, it always is showing the same setting. We can see here, for example, the indicator is really showing the real trend, but the Duncan big time and short time is breaking, so we will have a divergence here. Once this line and this line is turning to red, meaning that we are in a very strong bearish, right? As we have seen, for example, in 2021, we had very high periods of bull traps and everybody was trapped here, lost a lot of money, but the indicator showed stay bearish, stay bearish. So how can we use it? We can set it, for example, on daily, then we go to low time. We see here it was, for example, from the 26th of October, right? So we had a big bearish move here. Now, instead of staying bearish because the indicator is bullish, we could say, okay, we wait. We can act with Donchian channels or just with trend lines. And here, for example, we had a breakout, then we had a pullback, then we could, for example, take that bullish trend, put our stop somewhere here, or here, or here, whatever, because our bias was bullish. So, and then let the trend run. It was before the FOMC, and then suddenly the indicator turned red, and we had very drop down here. We took profit here, for example. We started to sell here and also covered here. And then the indicator suddenly turned green. So we took here 2 losing trades. We had at the beginning here 5. We had here 2 losing trades, and we had here 5 winners. We let it run here, but the losses were minimized because our stop were something about here, something here. But we manually liquidated immediately the positions and went bullish again. So that's the reason that today we are bullish, right? But I will demonstrate it now how it's working. So the price, the indicator has to show green, meaning bullish. We take only bullish setups. Then it doesn't matter where the price is, below or above the indicator, it doesn't matter. As long as we have a Donchian bullish signal, we buy, and the stop we place on the lower possible or wider. It doesn't matter. So I'll let it run. Okay, the first one is $100. Now Duncan is bearish, but the indicator is bullish. We take only bullish signals. And we take the next bullish trend. The stop is the same, the low channel. And this is on 5-minute chart. So the stop will be something here. So we get out. Now we have 433. The market collapses. We don't go bearish. We stay bullish and wait for the next signal. For now we have, in a very strong bearish market, two trades, two winners. Now we take also this signal. And we get stopped out. We wait. So, and the indicator is showing also the next possible support resistances. Now they change the color, signalizes that the current trend is bearish, but the major trend is bullish. We trade only in direction of the bullish trend. We take the trade number 4. Right, therefore work always with stop loss, even with this trending trade indicator I developed. That's very, very effective. You will see how important the stop is. We got stopped here again, but we have $84 plus. Now the account is $778, and the next buy we generate. And we get stopped out again. Now the account has been risen to 889. Take the next one. but we are only bullish, right? You see we have the odds on our side, and we get stopped here again. Now the account has been risen to $956 after 1, 2, 3, 4, 5, 6, 7 trades. 7 trades we made with 1 loss and 6 winners. And this indicator has also its own Donchian, meaning if we have, for example, higher tolerance, we can change the number. Here, for example, I put it down 255. And you see now that we have wider ranges of entries and stops. We can, for example, now accumulate this to go, let's say, 500. Put it a little bit higher. All right then, so it seems for 5-minute charts, that's right. So, meaning as long now as the Donchian is coming down, we expect a retracement. We wait, and then here we go long again. This is our stop, right? So our stop will be, for example, on the low, and if we go back again, we see here still on 5-minute chart, all the periods the people went short and bullish and sold, and day traded buy sell buy sell buy sell sell buy sell. Instead doing this, we just took the buy signals, only buy signals all the time, and we trailed our stop here. I will demonstrate it now before saying goodbye, how it was this period. So we place then our buy. Why? Because the indicator is telling us buy, green color, right? So you don't need to do anything else. And we will see, we just need now only to trail, and we are doing it before, but not adding any kind of position sizing. Just take the trade and let it run. We have 4 contracts for NASDAQ. So you can hear also the trend of the low time frame, whatever, from 1 second to monthly, and higher time frame. You can, for example, add here the EMA, what is on 15-minute chart, and we see we are in 5-minute chart. This is the trend of 3 hourly. So this is 3 hourly, and this is 15-minute time frame. Trend. And both trends are in the same position. We can, for example, say if the 15-minute trend is green again, we buy. And if the 15-minute is red, we, for example, take profit. Or we stay also in the trend and we take only some profits. So I make it a little bit thicker so we can see there. For the time being, we don't add, we just move the stop and make it another color. The market coming down, we don't do anything. So for example, if you're working, doing something else than trading, you can just put it on hourly and every some hours to check your trades. Very simple, very effective. But always work with stop loss orders, always. Now the market is a little bit draw down. We wait. The 15-minute trend still bullish. The 1 hourly is bullish and 3 hourly also bullish, right? So last not least, I want to demonstrate how you can take profit for entry. Currently, we see here the trend is bullish, but the 15 minutes is bearish. We don't do nothing. We wait until the 15-minute trend is becoming bullish and then we enter the market. Now the sign is coming. Okay, 1 2 3 4 5. We put our stop here. And we let it run. The next time, if the 15 minutes trend is becoming red again, we take 50% of the profit out, whether they are in minus or in plus, but we let the others in and let the trend ride. We see the market, we have now a negative drawdown in our account. It doesn't matter because we have calculated how big that drawdown will be. This is based on $20,000 account with full contract. You can take, for example, a contract size of 0.01 or 0.02, whatever your account size is allowing you, and let it run. Now we see finally both threads are positive. It's a question of time where the market will break out, and it seems it's doing it now. Our stop is the same as on Donkian. Here, now we move our stop here. And the 15-minute time frame, this line is our trigger to enter a bullish trend and to take profit if we want to. We don't need, but if we like, so we can combine both methods together and then at the end you will see the difference. If some people are putting take profit 1 to 2 or 1 2.4 or 2.5 whatever, and the difference how much bigger this style of trading. So we see here that at the beginning we enter the market here, and then immediately we close. The first trade here was a minus, then the next one was here, and we took profit at around here. So we had a reward to risk ratio 4.42, right? Our profit was 4 times bigger. Then trade number 3 in this year was trade number 3 was 9.53 to 1. We entered the market here at 12,045, and we took profit at 15,151. So just with one trade. Then the next trade was here, $2.29, and you see we didn't take this red period. This trade we took here and somewhere around here, I think 0.5, and now this trade is here. We have already taken here 7 trades, 7 big trades, right? So, and the account size around in this year was grown to 675% with 7 trades. And why so? Because we just use the power of trend trading. So if next time someone is telling you trend trading is for losers, or make day trading, buy support, sell resistance, ignore all those persons, because it will cost you a lot of money. Trend trading is very simple. It is working all the time, since many years, and also 100 years from now, trend trading will work always. All right. So thank you for watching this. Have a nice evening and have a good trading week.